Good morning, good afternoon, good evening, depending on the time you are watching this video. So today I'll be showing you how I flipped $50 to 780 dollars, or let me say $785, yeah, something like that. So um, we'll be using just one indicator. Don't mind the moving freeze that's on the chart. We'll be using one indicator majorly for this particular strategy, and we'll be using price action as well. So before the end of the video, I'll show you the settings for the indicator. I'll show you how to enter the trade, how to set your take profit and stop loss. So let's get into it. So I've marked out um some of the trades I took using the strategy. So I'm using this particular account. It's not my trading account. So now let's get into it. If we look at this price action here, we have this I here and we have this I here. You can see. So but if you look at the indicator down here, we have something completely different. You can see. You can see that this I here, this I here, this one is lower than this one. This is higher, this is lower. And that's not the case on the chart. You can see the chart here. This is lower, this is higher. So the moment you see something like that on the chart, what you'll be looking out for is for the price to break the recent low if you're selling, and if you're buying, you wait for the price to break the recent high. So depending on the way you trade, for me in particular, I enter the trade in two ways. If I'm selling and if I want to sell rather, and I see a bearish momentum, let's say I see series of bearish candles, of one very big bearish candle, at the close of that candle, I'm most likely to enter the trade. Or if there is a break like this, definitely I'm entering the trade. I'll show you what I mean when I get to that when I see something like that on the chart. So you can see here there's a break here, then I'll enter my trade right here, the close of that candlestick. As probably set my um stop loss around here, and then target um 2 RR. So 2 RR, most at times 3 RR, but mostly 2 RR, 2.5, because I don't want the trade to linger for a very long time. So so I marked this place out just to show us something. If you look at the charts, you will see something like this here. You see we have this low, we have this low, we have this low here. Now, if you look at the indicator we are using, you can see that it is also the same thing with what is up here. We have this low, we have this low, then we have this low. You see that it is the same thing with what was showing at the top. So definitely that is a no-go area for me. That is a no-go area. I won't enter so straight. Just leave it. Um, hmm. Then you can see here we have this low and we have this low, lower low. But on the indicator we have something different. You can see here, you can see here. So in that case, this is what I was saying the other time. You see, we have this, we have this, this bullish candlestick. So if I'm seeing something like this, I'm definitely entering the trade at the close of this bullish candlestick, at the opening of this bearish candlestick. That's where I'll be entering my trade from. And when the price eventually break this high, I'll add another position and target my 2 to 3 hour, then set my stop loss right here. Yeah. And before I forget, this particular strategy, I will advise you don't use it in any time frame that's lower than 15. You can use it 15, you can use it on 15, on 30, on 1 hour or 2 hours time frame. So I don't recommend using this below 15 minutes. So that's that about that. And then here's another suppose trade. You can see here we have this low, I mean um we have this high, then we have this higher high. You can see that this high and this higher high. But why won't I enter this trade? I could have just rotated and entered the trade here. But why I won't enter the trade is because of this. What's okay? What's the what's it called? The indicator is showing anytime, yeah, on a normal ground, according to the way I enter the trade, as long as I have something like this here and I have something like this here, I have something like this here, see, that will have been a proper setup. What I'll be looking at for now is where we enter the trade. But the moment I saw something like this here, I know that I can enter the trade again. You see, the moment the price has gone and enter inside this 80% level here before retracing back, automatically that trade is invalid for me. So yeah, I automatically know that I'm not entering any trade here. Let's see. The price actually went down. It went down, but enter the trade definitely. This you can say is a proper setup here. I have this low, I have this low here, then we have a lower low, and the indicator is showing us something different. Okay, so in this case, I'll be entering my first trade after the the completion of this bullish candlestick here. This bullish candlestick here. That's why I'll be entering my first trade. I'll be targeting my 2 hour or three, which if calculated it enters the 3 hour here. Definitely. Then I will enter my second. Um, I'll be adding to my position here. I'll be adding to my position here. I'll be adding to my position. And then the same thing, I'm setting my stop loss at the same place. Here. And you can see, if you enter the second trade, I'm not sure it's go to 3 RR before the price retraces down. Yes. So most likely you lose the second entry. But if you enter the first one, you will definitely win the trade. Uh, it is trading. You do expect to win all your trades. So that's that. Um, You see, this is a good example of what I just talked about the other time. Though we have this um, we have this low here. You can see. Then we have something like that here too. You see here. Even though it is just giving us a signal to enter here, but because the price has entered the 20% level here, it was to be a a selling trade. Once the price enters 80% level before retracing back, there's no way you are entering the trade. And if it is if you want to buy, once the price enters the 20% level here before retracing back, you are not buying. You are not buying that trade. So that's that. Then we have a proper trade here again. You can see. Oh, you can see how then side here we have something different. You see, this is a proper setup. You can see. So here, believe me, my first trade will be here. My first entry will be after the closing of this bullish candlestick. That will be my first trade. My first entry rather. And the second entry will be here. You can see. So if you enter those two trades, believe me, you will win it too. To have compensated for the one you lost earlier. It's not even a loss if you enter the two. If you take the two entry, it can be a loss. So that's that. Um, then we have another one here. You can see. You can see here low, another low, then low, then high. Then you can see this. This is what I was talking about. You see, look at this big momentum. Look at this. Look at that. So you enter a trade from here, there, wait and enter another one here. That's how I trade actually. Look at it. Very good move up. So I would have gotten that. That's one thing about trading in general. You can't catch the whole pips. Imagine you holding up to this level here. Even if you're holding up to this level here, I'm sure. Imagine holding up to this level here or even here. But you have to be disciplined. You need to have a strategy. Okay, this 3 RR I want to take, it is 2 RR I want to take. Because at times it might get to that 2 RR, get to that 3 RR, and the price it traces back immediately. So it happens like that. Imagine holding here. Imagine holding up to this level here. Imagine holding up to this level here and thinking the price will keep on going up and see what happened. Price went down significantly. So this is another one here. If you look down, you see that it is very obvious. Oh, this is a very sweet trade. If I see something like this, believe me, I'll be entering. I might be entering multiple positions. That is something like this. With this, see this candlesticks here, this momentum, see four, four bullish candlesticks, four bullish candlesticks. At the third here, I'll be entering my first position because it was not a very big bullish candlestick. So at the third here, I'll be entering my first position, and then getting my stop loss around here. So when price eventually go to this level, I'll be adding another position. And I don't know how it will go. For me, at this level, when I see something like this, when I see this series of bullish candlesticks and the price retraces a little bit here, the way it does here, this little retracement here, if it gets to 50% Fibonacci level, I will add another position. And you can see price went all the way up, all the way up. So that's it. So let me show us the indicator settings. As you can see, this is stochastic oscillator, and these are the settings. Yeah, you can take a screenshot or write it down. Um, those are the settings. I think I've shown us how to enter the trade, and I've shown us some of the rules regarding the trader. Anytime the price enters, if you want to buy, anytime the price enters the 20% level here, that trade automatically is invalid. And if you want to sell, once the price gets to this 80% level before the trading back, then immediately you're not entering that trade. And the way I enter my own trade, if I see a bullish momentum, I'm buying. If I see a bearish momentum, I'm selling. If the price eventually break particular level, I'm buying or selling. So depending on your own trading principles, and I also advise that you test this out, you back test it yourself before you start trading with it. So that will be all for now. Have a great day.